In this course, you will learn about cryptocurrency. You have to go through each of the video one by one in order to get in-depth knowledge about crypto trading on multiple exchanges, how the technical indicators are used, and how you can make profit out of it. So let's dive into it. The most common question asked is, what is cryptocurrency? It is not a paper currency, but it is a form of currency that exists digitally or virtually and uses cryptography to secure transactions. Cryptocurrencies don't have a central issuing or regulating authority, instead using a decentralized system to record transactions and issue new units. It is a digital payment system that doesn't rely on banks to verify transactions. It is a peer-to-peer system that can enable anyone, anywhere to send and receive payments. Instead of being physical money carried around and exchanged in the real world, cryptocurrency payments exist purely as digital entry to an online database describing specific transactions. When you transfer cryptocurrency funds, transactions are recorded in a public ledger. Cryptocurrency is stored in digital wallets. It is run on a distributed public ledger called blockchain. A record of all transactions updated and held by currency holder. If you own cryptocurrency, you don't own anything tangible. This is the most important point that have to be kept in mind. What you own is a key that allows you to move a record or a unit of measure from one person to another without a trusted third party. Transactions including bonds, stocks, and other financial assets could eventually be traded using this technology. Now we have understood what is cryptocurrency. So the next important point is, what are the common examples of cryptocurrency? Bitcoin, as you all must have heard about it, that is the king of crypto. Then a very potentially strong, fundamentally and technically strong coin is Ethereum. Next one is Litecoin, Dotcoin, Ripple coin, and Dogecoin. These are all the types of currency that you can trade on crypto platform. It is not limited to only these, but there are many coins available. These are just few of the examples. Now the important point is how you can choose a platform, how you can sign up and verify your account on that platform, how you can fund your account, how the order is placed, how you can buy a crypto or maybe store the crypto for long term, and how you can sell your crypto. Lastly, how you can take out the profit out of it. Crypto can be stored either in digital wallets or in hardware wallets. Digital wallets are completely free to use and they are highly secure. However, hardware wallets are a bit expensive and you have to spend some bucks in order to get them. Now when you are planning to trade on crypto platform, you have to find out and choose which platform has to be chosen. There are multiple exchanges available to trade, but you have to choose the exchange that is available as per your location. All the exchanges are not providing services in every country, so I'm going to give you some common examples of a platform. These are the most reliable trading platforms available. First one is Binance. You can sign up at this URL. Then the next one is Bybit. Again, the URL is given over here. Third one is OKs. The URL is again given over here. And these are the logos of these platforms. Now you have to sign up and verify your account. For this, I'm going to show you some practical example of it. I have already logged into my Binance account. So next is that I have to make an account. For example, if I'm not If I have not signed up, then I'll be going to this binance.com. I'll be signing up, and then Binance will be asking you to verify your account by giving NIC, some passport pictures, or maybe other documents, and your account will be verified in 24 to 48 hours, and your account will look like this. We say verified. So once your account is verified, you have to trade. Now if you can see this markets tab, I'll be clicking this markets tab, and I can find there are two types of market: spot market and futures market. If you are a beginner, you have to go to spot market and trade for at least 1 year. When you are aware of all the cycles and ups and downs of the crypto market, then you can definitely move to futures market. Futures market is very risky, and if you are not aware of the situations and how to trade, then all your money will be lost. Exchange will be grabbing all your money. However, in spot markets, if you have bought maybe Bitcoin at this particular price of 38,953 and the price comes down to 30,000, so definitely you are in loss. But as you are in loss, your money will remain there. You have to wait for some time that it will again rise to this point, or maybe it will rise to 40,000 or 60,000, and then you can sell your invested amount at the price of 38,955, and you can sell it at maybe 40 or 45, maybe 60,000, and you will get some handsome profit. However, if the price falls below 38 and it goes to 37 or 36,000, then although you will be in loss, but your money will not be grabbed by the exchange. Rather, it will remain there. However, in futures market, if you are going in loss, then at particular price, the exchange will be in authority to grab all your amount, and you will be liquidated with $0 left in your account. So this is highly risky. I would suggest you to keep working in spot market. So let's see how it works. I have clicked spot markets, and these are the available coins. They are too much, like more than 14 pages. There is a huge amount of and a large variety of coins available. So let's search BTC USDT. Before that, I have to tell you another amazing fact, that you can see it is saying BUSD. That means that Binance is giving you an option to trade in Binance USD. The amazing fact about this is that if you are trading in spot market and you buy a coin, the BTC, but using the currency BUSD, then there will be no fee, because whenever you will buy or sell any coin, there will be some minute fee that you have to pay to exchange. But if you are trading in BUSD, then you will not be paying any fee. That will be free of cost. However, if you are trading in futures market, then even if you are trading in BUSD pair, still you have to pay some fee. So I would recommend you to use BUSD in order to trade in Binance. Supposedly I am using USDT instead of so let me change my coin to USDT. So if I have landed on this page, now I want to buy Bitcoin or maybe any other XYZ coin. So the price going on is 38,906, and it keeps fluctuating, like it's 998, 39,000. There are two options available: limit, market, and stop limit. Limit means that I have to enter the price I want to buy that particular coin. For example, I find out that this price is too high for me to buy. So I'll be placing a limit order, 30,000. Whenever the price will touch 30,000, then my order will be filled. And I have chosen 100% of my available BTC, that is 13.8. I'll be clicking buy BTC. You can also choose the amount of USDT by clicking on this bar, either 25% or 50%, 75%, or maybe you can by writing manually here, or maybe 9, and this bar will automatically slide. Okay, so 30,000 supposedly is my price that I want to buy BTC, and click buy. If I go down, that my order is there. Whenever the price will touch 30,000, the order will be filled. Likewise, if I want to sell my coin at limit price, then I will maybe adding 50,000 price. I will 100%, whatever is available with me right now. This 419.00419 equivalent to $209 if I'll be selling it at 50,000 price. Supposedly, if I sell it at 40,000, then you can see $167. So this is how price varies, because you are increasing or decreasing the price of the coin. And if I am hitting sell BTC, sell order will hit. If I scroll down, you can see that the sell order and buy order available. I have hidden other pairs, but if you have a look at that, then I have more than 9-10 orders available. I have placed them on limit sell, so that whenever these prices will be hit, I'll be enjoying my profit. Then the next option available is market price. Market means that whatever the price is going on, it keeps fluctuating in nanoseconds. So whatever the price is, I'm okay to buy my coin at market price. Whatever the price is, I'll be clicking buy BTC. Likewise, if I'm willing to sell my BTC, then whatever the market price is going on, I'm like 100% or maybe 50%, 25%, I'll be clicking the sell BTC. So likewise, these orders will be piled up here. Or maybe these will not be piled up here in fact, but they will be filled immediately, because we are buying or selling on the market price. So whatever the market price will be, the price or whatever the coin I'm selling, it will be added to my wallet and over here, because I have bought or sold my coin at the market price. Then there is a stop limit price. For example, I have bought my coin at 38,996. I'm intending to buy it sell it at 45,000. But I am of the view, and I am afraid that the price may fall down to 38,700. This way I will be in loss. So I'll be adding some stop limit like 38,700, that if this price reaches, I will exit the trade. I'll be out of it. I'll be clicking buy BTC. Stop limit allows me, although I'll jump from 995 to 700, then definitely I'll be losing some bucks, but that amount is very minor as compared to a huge loss of $1,000 or $2,000. So stop limit allows you